We've rated the Strata Hinjewadi Pune pre-leased commercial fractional ownership opportunity as 7.85 on 10. Hi, this is Raj Shah.
Hi, this is Rishi Dedia. We are from Invest in Pre-Lease. We help you profit from curated pre-lease proposals.
So, Rishi, are you all influencers or you all are authorized channel partners for Strata and other asset managers?
So yes, we are authorized channel partners for Strata and other asset managers. We have an experience of 2+ decades in the commercial real estate industry, and we want to become your trusted real estate investment partners. So Raj, what's the asset that we have on the table?
So, the total asset size is 34.75 CR. Minimum investment is 25 lakhs and then multiples of 5 lakhs.
So you get 16,670 per month as the rent for the first year. You have a net average ROI, that is return on investment, of 7.96% for the first 3 years. And against the shares that are getting allocated to you, you get approximately 360 square feet in the premise.
Rentals will start within 45 days of the drawdown, which is transfer of your full amount. And the tenant is one of the most trusted brands in the country, and it's their subsidiary, which is into auto components manufacturing.
You have a duration of 9 years, and you have a lock-in of 6 years and a side letter of 3 years again.
Purchase price is 6,642 per square feet, and you will be investing in a private limited company which will own the asset.
The good part is we don't charge our investors for investing in the fractional ownership proposals. And with this, we would request you to please call us or get in touch with us if you would be interested in investing with us. You can subscribe to our YouTube channel for getting more updates on this. So Raj, moving on to the detailed review, can you guide us what's happening?
So we start off with the tenant, and in this case, it gets 1.25 on 1.25 because.
So we have visited the site physically and we have seen the asset. We have come to know that the tenant belongs to a conglomerate based in India, which has been in existence for more than 150+ years. They have a very strong brand repute in the industry. It is a subsidiary of that conglomerate and it is into auto component manufacturing. They have a lot of sister concerns which also exist in the vicinity. They have a strong history to back them up, and that's the reason we are going ahead with 0.5 on 0.5 for tenant. Looking at the Fortune 500 or global or India Fortune 100, yes, the conglomerate doesn't need any rating per se. It's the brand that we all trust, and definitely it holds a strong ranking in Fortune 100 India and also Fortune 500 global as a brand or as an entity or a conglomerate that we look at. And that's the reason, though being a subsidiary, we are still going ahead with 0.25 on 0.25 with the credentials that it holds.
So it is a profitable tenant, so 0.25 on 0.25. There, the tenant industry outlook, again, auto component manufacturing, automobiles are not going out of fashion. They may change from being powered by petrol or diesel or CNG to EV, electrical, but the components will still be required. So the outlook looks excellent, 0.25 on 0.25. There, with that, the asset is 1.25 on 1.25. Now we move to knowing the asset. Rishi, have you mentioned that you visited the asset? So what does it look like?
So this is a 2-acre land parcel, approximately 80,000 square feet, where 50,000 square feet is already constructed. This is an old industrial building which was having an assembly unit out here earlier, and it is now getting converted into a proper office premise. So they are not demolishing the structure. The structure is going to be intact, but they are going to refurbish the structure. Looking at that aspect, we want to put a 0.3 on 0.5 because this is not a grade A asset. This is going to be refurbished industrial asset converted into an office space. With this, I also bring down the IGBC rating. IGBC basically stands for Indian Green Building Council rating. This is basically meant for how energy efficient your building is, because this directly impacts the outflow in terms of the maintenance, in terms of the other charges that you pay for maintaining the premise. So here, since this structure is at least nothing less than 10-12-year-old structure, it doesn't have an IGBC rating as of now. That's the reason we are given 0 on 0.25.
So IGBC rating, you mentioned that it impacts the outflow. Does it lower the outgoings, and how does it impact the investor?
If you have an IGBC rated building, basically the outflows are going to go low, and the profitability of an investor in terms of an exit, in terms of the maintenance cost, is going to go high. So basically, the profitable.
You mean it will go low?
The maintenance will go low, the profitability will go high. We have discussed this with Strata. Strata is actually working on with their contractors, if at all IGBC rating can be procured for this existing building with regards to the existing provisions that are made in the building. We might have to wait for some more time for that IGBC rating to come. Till then, we are giving 0 and 0.25.
OC has been received, occupation certificate, because it's already an old constructed building, therefore 0.25 on 0.25 there. We are always excited if an asset can be subdivided with independent access. In this case, it's a plot with unused FSI. What this means is that the permission for total constructed area is higher than what is being consumed. So tomorrow, investors, if they decide, could construct additional space, which could again be rented out, and you get higher returns for that. So therefore, 0.25 on 0.25 there. Rishi, what is in and around the asset, and why do you think it's a great location?
So this asset is located in Hinjewadi. Phase 1, if you enter the Hinjewadi, and Phase 1 has a lot of development that's happening in and around. You have tenants like Infosys, Wipro having their campuses probably in a 1 kilometer vicinity. You have the Dassault Systems, which is existing again, having a good strong base out here. The best part is this particular entity, the tenant, also has a lot of sister concerns with the vicinity. You have companies like MNC, Bayer, paint process work. Now this is a German entity. You have a metro station in terms of the infrastructure that's getting developed at 500 meters from the asset location. So all in all, if we look at the location, it's an upcoming location with lots of development happening in and around, and with a lot of campuses. So you have a lot of employment that is moving, a lot of people coming in and out. So all in all, we put together 0.75 on 0.75 because this is a futuristic location. So Raj, what's the big deal?
So the duration is for 9 years. So, and we expect a minimum of 5 years. So there it gets 0.25 on 0.25. Lock-in is 6 years, whereas the minimum we expect is 3 years. So therefore 0.3 on 0.3 there. In terms of the penalty and corporate guarantee, it doesn't get any marks because as it's related to the point below, registered agreement, registered, is it a registered agreement to lease? No, unfortunately, this is on the term sheet stage or the letter of intent stage. So for 3C and 3D, 3C it gets 0 on 0.2, and for 3D, which is registered agreement, it gets 0 on 0.5.
So as per the term sheet, we've come to know that increment is 4% per annum. We generally recommend 15% after 3 years or 5% year on year. And this is in tandem, but again, since it's 4%, we would want to take that 0.1. And that's the reason we are giving 0.4 on 0.5. Rent start date, we always recommend that once the payout is done, once the drawdown for 100% payment of investor is done, the rental should move in immediately. In this case, it will take at least 30 to 45 days for the rents coming in for the investor after the entire drawdown that happens. And that's the reason we have taken away 0.1 and we are giving just 0.15 on 0.25. Raj, what's with the deposit and the notice period?
Deposit is 4 months, and we would ideally like it to be 6 months, therefore 0.15 on 0.25. In terms of the notice period, I see there's an error that we've made. It's a 6-month notice period, so this should get 0.25 on 0.25. We've given it 0.15. So basically, this means that the know your deal goes to 1.5 instead of 1.4.
The return on investment, that is the rental yield, for the first 3 years, the net average ROI is 7.96%, which is a fairly good ROI to have. And that's the reason we have gone ahead with one-on-one. With regards,
what is the minimum expected?
So minimum expected is 8%. This is very close to that, and that's the reason we have not taken away any points here. 7.96 is a fair ROI to have for the first 3 years, and that's the reason we are going ahead with one-on-one. Raj, what's your take on the tenant stickiness and lower than market rent?
So the rentals are in and around what the market is, as per what Strata's presentation is, and our conversations with local agents there. So therefore, it gets 0.5 on 0.5. The tenant is going to be spending money on doing up the furniture, etc. And it's always a good thing if the tenant is spending money, because it means that their stickiness is going to be high. And because they're spending money, it's going to be 0.5 on 0.5. So in terms of the deal evaluation,
is there any other reason why the tenant is going to stick around here? Is there a sale and leaseback that's happening here?
So that's another important point. This asset is owned by the company, and that company itself is coming on lease. So therefore, the stickiness for them is going to be very high. And now we move on to knowing the asset manager.
So we look at Strata as the asset manager, and we have known Strata for quite some time now. We know that Strata is backed by Elevation Capital, Kotak, Gruhas, and by Zerodha founder Nikhil Kamath. We know Sudarshan Lodha, who's a lawyer by profession and has been doing a lot of work in the fractional background space. He's a co-founder for Strata. They have an amazing team. All in all, we have seen and understood from them that they have amazing setup. And that's the reason we are giving them 0.5 on 0.5. Is the asset manager profitable? In this case, they are yet to be profitable. So unfortunately, they don't get any points here. And that's the reason we have given 0 on 0.25. Raj, what's your take with the client dashboard and the profitable exit given for any asset?
Like we discussed, all investors would want their investment ledger, TDS, etc., at the click of a button. And Strata has invested heavily in terms of time and money in building such a system. So therefore, they get 0.25 on 0.25. In terms of profitable exit, Strata is just about 2.5 years old. Too early for them to give an exit, but we hope that they will get full marks on this soon. So currently 0.0.25 there. In terms of the total asset under management, Rishi, why is that important and how much do you give them?
There's a learning curve that's always involved when an asset manager and the company starts managing the asset or the portfolio that they have. And we have realized this in the interactions that we have had with a lot of asset managers. It plays a vital role in terms of their evaluation, in terms of asset selection, in terms of how they are bringing the deal on the platform. And that is the reason we have graded this, and that's the reason we have here. In this case, Strata already has crossed 500 crores plus asset under their management. And that's the reason we want to give them that 0.25 and 0.25. Raj, what's your take with the hurdle rate?
So Strata is charging 20% as their performance fee over and above a 10% hurdle rate. It means that if you have invested 100 rupees and Strata gets you a return of 12% IRR or year on year, it means that they're going to charge you 20% on the 2 rupees, which is over and above their 10%, which means 40 paise. Now, this is a great that asset managers charge a performance fee because it means they have skin in the game. They will be very careful as to what price point they are buying this asset. We just wish that instead of 10%, it would be 12%. So 0.3 on 0.5 there. In terms of knowing our 25 cents, 2 cents rather, or our 25 paise, we think this is an excellent asset. In fact, by the time the video is out, I think Strata would have been fully funded. Nevertheless, call us. They have other opportunity that's going to be launched soon, and we have other options as well. So Rishi, what's your take?
If you look at this particular asset, it has all the tick marks in terms of the location, in terms of the asset, in terms of the tenant, in terms of the maybe the grade of the asset is not grade A, but then yes, it's a wonderful asset to be invested in. You have a amazing tenant with a lot of future scope in terms of appreciation. There is a balance FSI that is also pending in this particular asset, wherein you can construct a further area and probably you can leverage on that. So all in all put together, we have seen that you have an amazing asset manager as well, which is going to do the needful in terms of managing the operations and all. It's a good mix, and that's the reason we would definitely want to give that 0.25 and 0.25. And this is definitely an asset that can be gone ahead with. Nonetheless, like Raj said, that since this asset might be fully funded, there is also a waitlist that can be created in case if you're really looking forward for only investing in this asset. Or yes, there will be a lot of assets that will be coming through our platform as well. You can always get in touch with us.
Our final tally is 7.85 because we had missed out on 0.10 points in the earlier slide. So kindly forgive our error on the screen. Instead of 7.75, it is 7.85 on 10. With that, we encourage you to call us for any fractional ownership opportunity that you even want us to evaluate and we haven't evaluated. We are very happy to talk to you about that. So thank you and look forward to your calls.
Thank you.